Amazing response to Pinterest. Are you surprised? A 25% pop? Either the bankers screwed up in pricing it, or people really like Pinterest.
People do like it, and to your point, it's a discovery platform. It's really not a social network, although we think it will be comped like a social network. So I think the good thing about Pinterest is it's a great business. They have this unique data asset where people tell Pinterest how they see the world in pictures, how they categorize the world. The problem is companies like Facebook, Twitter, Snapchat, the companies that will be comped on Pinterest, are trading 6 to 8 times next year's revenue. Pinterest at this valuation is closer to 11 times. So it feels like the market is already pricing in a lot of that great business.
I mean, first off, I think the term social media is outdated and dumb. I mean, let's just be honest. It's just media at this point. That said, do you think there was a strategic reason why the CEO of Pinterest kept saying we're not social media? Because he didn't kind of want that stain.
Yeah, I think social media is a bad word right now. I mean, you look at what's happening with Facebook,
it's 2 words,
and Twitter.
Doug.
2 bad words combined into one. I think you look at Facebook and Twitter and sort of what's happened with them and public sentiment around, especially privacy on Facebook, but also the conversation just politically. You know, the discourse is very difficult on both platforms. Pinterest talks a lot in their S1 about empowering their users. I think that's a very different message than what we're seeing Facebook and Twitter do with their users, where you have FOMO and depression.
You know what's amazing, Leslie Picker, besides you, by the way, is that if a stock falls 25%, everyone screams, Wall Street really screwed that up. If a stock rises 25%, nobody's saying anything. It's still obviously 25% mispriced. You see where I'm going with this.
Yeah, it's tough to price an IPO perfectly, and if it closed flat today, people would complain about that too. But in terms of Pinterest, this company sold primary shares only, which means that all of the money raised from the IPO went back into the coffers of the company. There were no selling shareholders that were raising money to fund their own pockets. So what that means essentially is if you do see a 25% pop, that is a loss of capital. That is money left on the table that Pinterest could have otherwise used to reinvest in their business. Now, that said, it is important to keep investors happy with these IPOs. You want investors who are kind of going to stick around for the long run through that 6-month lockup period, which expires in about 180 days. You want people that can stick around, and the best way to make them happy is to make them money, Brian.
Yeah, it certainly is. All right, let's move on now to Zoom Video, because if you thought Pinterest was doing well, and by the way, it is. Nobody's taking anything away from 25% gains. Zoom, new ticker ZM, soaring, up more than 75%. Let's bring in Deirdre Bosa from San Francisco. Deirdre, okay, Zoom getting a lot of love, but it also faces a lot of competition.
That's right, Brian. And I think Zoom's performance says as much about the company as it does about all the other big enterprise tech names out there who haven't been able to capitalize on this video conferencing software. You've got a very crowded field here. You've got Microsoft, which has been pushing Skype for Business, Cisco's WebEx, which Eric Yuan actually worked for, and then Zoom seemingly comes out of nowhere and sort of takes this field and is the leader and known to be easier to use. And part of the reason for that is because it started in the cloud. Some of the other competitors and big names in this space started on antiquated conference call or chat software. So that's been one of its big successes. And I think that also speaks to the argument and some of its risk factors. How can it continue to compete against these very well capitalized big tech name competitors? Eric Yuan has built a company that was just more simple and easier to use. That's been its strength. And you can understand how it may be continuing to use these strengths to expand into different verticals like telehealth and education.